Good afternoon, gentlemen of the press. The Monetary Policy Committee, MPC, of the Central Bank of Nigeria, CBN, held its 306th meeting on July 20 and 21, 2026. The committee reviewed recent developments in the global and domestic economies, assessed emerging risks to the outlook, and considered their implications for monetary policy. 11 members of the committee were in attendance. Decisions of the MPC. The committee decided as follows. 1, retain the monetary policy rate at 26.5%. 2, retain the standing facilities corridor around the MPR at plus 50 to minus 450 basis points. 3, retain the cash reserve requirement, CRR, for deposit money banks at 45%, merchant banks at 16%, and non-TSA public sector deposits at 75%. The committee's decision to maintain the current policy stance followed a thorough assessment of the balance of risks. Although the headline inflation moderated marginally in June 2026, global uncertainties have heightened due mainly to the renewed hostilities in the Middle East. In view of the evolving developments, maintaining a cautious monetary policy stance remains appropriate. Considerations. In arriving at its decision, the committee noted the recent resurgence of hostilities in the Middle East, with particular attention to its spillover effects on global energy prices and the potential pass-through to domestic inflation. Notwithstanding the development, available evidence suggests that the Nigerian economy has remained largely resilient to the external shocks, reflecting the gains from prior reforms implemented by the fiscal and monetary authorities. However, maintaining the current monetary policy stance will provide an opportunity to closely monitor incoming data and assess the trajectory of inflation to guide future policy decisions. The MPC acknowledged the federal government's renewed commitment to strengthening policy coordination, with particular emphasis on the ongoing collaboration with the monetary authority, which has helped to moderate the impact of the Middle East crisis on the domestic economy. Members thus noted that greater alignment between fiscal and monetary policies would enhance policy effectiveness and support the achievement of overall macroeconomic objectives. To further strengthen macroeconomic fundamentals, the committee underscored the potential benefits of Executive Order 9. Members further commended government's renewed efforts in improving crude oil production and encouraged relevant agencies to strengthen the implementation of reforms to maximize the potential in other sectors, such as solid minerals, to complement government earnings. The MPC welcomed the positive outcome of the banking sector recapitalization exercise, noting the improvement in the resilience of the banking system as reflected in key prudential and financial soundness indicators. It nevertheless urged the bank to sustain effective surveillance to preserve financial sector soundness and mitigate potential risks to financial stability. Price and other domestic developments. Headline inflation year-on-year eased marginally to 15.91% in June 2026 from 15.93% in May 2026, ending the 3 consecutive months of uptick in price levels. The decline resulted from a decrease in the non-food component, which offset the increase in food inflation. Food inflation rose to 17.52% in June 2026 from 16.96% in May 2026, reflecting supply constraints in major food-producing areas and elevated transportation costs. However, core inflation moderated to 15.92% in June 2026 from 16.82% in May 2026, largely on the back of exchange rate stability. Similarly, the 12-month average inflation rate sustained its decline to 17.63% in June 2026 from 18.36% in May 2026, marking the 6th month of consecutive moderation and reflecting a slower pace of price increases over the medium term. On a month-on-month basis, headline inflation declined to 1.66% in June 2026 from 1.75% in May 2026, driven by a slowdown in core inflation. Real GDP expanded by 3.89% in the first quarter of 2026, compared with 4.07% in the preceding period. This was largely driven by the resilience of the non-oil sector, which grew by 3.94%, supported by improvements in telecommunications, financial services, trade, transportation, and other services subsectors. Oil sector GDP growth rate declined to 2.57% in the first quarter of 2026 from 6.79% in the fourth quarter of 2025 due to the maintenance of oil facilities and installations. However, recent data showed improvement in economic activities as Composite Purchasing Managers Index, PMI, rose to 50.1 index points in June 2026 from 49.6 index points in May 2026. Gross external reserves rose to $52.52 billion as of July 17, 2026, from $50.47 billion as of end of May 2026, mainly as a result of receipts from crude oil-related taxes and third-party inflows. This is sufficient to finance approximately 11 months of import of goods and services, surpassing the international benchmark of 3 months cover. Global developments. Recent estimates anticipated to slow to 3% in 2026 compared to 3.5% in 2025, reflecting the impact of heightened geopolitical tensions in the Middle East, trade policy uncertainties, and tight fiscal conditions. Risks to global inflation remain on the upside, driven mainly by the increasing prices of crude oil and other commodities. Inflationary pressures are likely to be further amplified by supply chain disruptions and climate-related shocks inhibiting food production. Additionally, exchange rate volatility and fiscal constraints pose upside risk to inflation in most emerging and developing economies. Outlook. Output growth is projected to remain resilient in 2026, anchored on the recent improvement in crude oil production, expansionary Purchasing Managers Index, and the positive impact of timely policy reforms. Inflation is projected to moderate further in the medium term on the back of continued stability in the foreign exchange market, lagged effect of previous monetary policy tightening, and improved food supply conditions as the harvest season approaches. The key risk to the outlook, however, remains the severe and prolonged escalation of the Middle East conflict. In the light of these considerations, the committee reaffirmed its commitment to preserve price and financial system stability and remains prepared to take appropriate policy measures guided by evolving macroeconomic conditions. The next meeting of the committee is scheduled for Monday, 21st and Tuesday, 22nd of September, 2026. Thank you.
Thank you, Mr. Governor. That was communique number 163, presented by the chairman of the MPC and the governor of the Central Bank of Nigeria, Mr. Olayemi Adusu. As usual, we take questions from members of the press. Please, when asking your question, state your name and then forget your name and ask your question. One question, please. Thank you.
I think I have one question for the governor and members of the MPC and Nancy, like the money line in Nancy. Governor, let's take it from where you ended. Your speech, you talked about headline inflation. It was virtually flat, at least the last 2 months has shown us that 15.91% in June, from 15.92% in May. And we've seen inflation hover around 15 to 16% for the last 4 months. I'm wondering if that is a comfortable place too for the central bank's MPC looking at it, because I heard it clearly earlier on when you talked about we do everything possible. So I'm actually wondering, with the supply side risk we're seeing from the Strait of Hormuz situation, global energy pressures also adding to what we're having here in Nigeria, how is the CBN going to tackle headline inflation? And if you're still on the trajectory of single digits, so because inflation, that's where it hits all of us, it's the thief that we are all chasing. And the side parts, congratulations for the international recognition, Central Bank of the Year. Let me just give you that. So congratulations.
Well, thank you very much, Nancy. Again, I think it's appropriate to remember where we're coming from. 11 months of disinflation, and quite frankly, from every indication, we were expecting that by early 2027, we would be where we want to be in terms of inflation and, firmly on track for single digit. Unfortunately, as you know, and you said it, these were shocks that came that, were not anticipated in that manner, and has gone on a lot longer than could have been anticipated. And really and truly, at this stage in the game, who knows how long that is going to be. So it's not something we can wish away. It's just something that we need to deal with. We are pleased, however, on 2 counts. One is the fact that inflation has moderated, albeit slightly. It has moderated. Headline has moderated. So that gives us an indication of the fact that the tools that we have implemented so far are bearing effect. They are bearing effect. Secondly, and you're absolutely right, there are rigidities, that these are rigidities that really and truly hit you from different sides. Collaboration between the fiscal and the monetary at a time like this cannot be overemphasized. And we intend to deepen and strengthen that collaboration such that we are alive to the responsibilities. And as I said, we will do what we need to do to ensure that we can contain rising inflation in any manner and bring it to the single digit that we have said earlier, and we still continue to stand by that. On the other note, I thank you very, very much for your kind words with respect to the Central Bank Award, Central Bank's Global Award for 2026. And a couple of things I think is important to say here. One is that if you recall, for those of you who may have followed, I was very clear in dedicating that award, not to the central bank governor, but to the staff and management of the bank. I felt, and I do feel, that that was a very, very important thing to do, because I understand fully that a lot of the very, very hard work that has been done by the central bank has not been done by the governor on his own, but has been done by the whole bank. And at times like this, when these recognitions come, it is important to sit down and reflect on the road of travel and why we are being relatively more successful and recognized internationally, by the way. This is not a local recognition. And one of the things I said when we received that award is that, the responsibilities of central banks around the world are a very solemn one. They are a very solemn one. What do we mean by that? We mean that they are a very serious one. It's not something that you take lightly, because the decisions you take impact millions of people, and in our case, hundreds of millions of people. So those who are dedicated to the cause, who are working behind the scenes to ensure that the central bank is living up to its expectations, need to be recognized. The other important thing from that is the resilience of the Nigerian people. The resilience of the Nigerian people. This has been a hard and tough journey. It's not been easy by any stretch of imagination. And I know that sometimes I get asked the question that, how does that percolate? And you are one of those that have asked me that question a number of times. How does that percolate to the man on the street? Now, if you watch, you will see that one of the most fundamental shifts that has taken place over the past couple of years is the stability of our system. Now, without that stability, you don't get investment. And without that investment, you don't get the growth that we need. So it's been so important to ensure that we worked hard to get that stability in place. And that is forming the platform for the greater growth in our economy. Reserves have been up. As I said, the stability is there, and the resilience is gradually paying off. So I thought it was very important to mention that. And then finally, I think one message that certainly I have gotten from this, and I would encourage everybody else too, is the fact that we are not an island. We are not an island. We'll be making a mistake to think that the things we do are not recognized and are not monitored by the rest of the world. They are. They are. And all the very difficult and painful reforms we've made, which were eloquently spoken about during the awards ceremony, are ones that have been tracked by those who make it a point of duty to do so. And they can see that those reforms have taken us to a journey that is paying off for Nigeria. And as other things begin to cascade and join with this, I'm confident that there'll be better times ahead for the country.
Good afternoon, Mr. Governor, members of the MPC. My name is Ndoka Children of the Nation newspaper. Mr. Governor, sir, the IMF recently said that the Naira is estimated or a bit undervalued, estimated at about 1,142 Naira to the dollar. That's what they're saying. This suggests that the currency is about 25.6% undervalued. What is the position of the central bank on this? Thank you very much.
Thank you very much. Again, to say that our view is one of continuing on the path that we had embarked on. And that is to ensure that we have a market that is transparent, that is liquid, and one that has willing buyer, willing seller. That's it. Now, where that price settles, and again, don't forget that these are the price is a moving target. It's a moving target. And where that price settles is a function of a number of different things. Where it eventually settles is one that cannot be done without fundamentals kicking in. Without fundamental kicking in. Oil and oil export, FDIs, domestic productivity to reduce imports, all those things need to kick in. But we are very comfortable at the central bank that we have a fully functional market, a market that is open, that is transparent, a market that sometimes you find that on a daily basis, the amount of turnover is in excess of 1 billion US, and a market that is responding to the positive things that we are doing as the central bank. A very important issue at the present level, the country does need a competitive currency, and from every indication, the levels in which they are move for competitiveness. Thank you.
Good afternoon, Mr. Governor. Good afternoon, everyone. My name is Musa Afloka with NTA. The Central Bank of Nigeria recently launched the Nigeria Overnight Financial Rate in collaboration with Financial Marketers Dealers Association to provide a kind of credible benchmark for the financial market. What does this mean for the economy, and how does it support effectiveness of monetary policy? Thank you.
Thank you. The NOFA is Nigeria's official overnight risk-free rate benchmark. It reflects between banks, it reflects the cost of overnight secured funding in the Nigerian interbank market. Now, why is that important? Why does that matter? Because really and truly, it reflects two things. One, it reflects greater transparency in how that particular rate is determined. In the past, we had a situation where banks would simply give a rate that they believed should be reflective of what interest rate should be. We've now done away with that. This system ensures that the real transactional rates, as opposed to judgmental, are the rates that are being used. That's very important. And I would also not hesitate to say that that is certainly something that we're not the first ones to do this. We're taking ourselves up to benchmark world standards. The UK, for example, has long moved away from LIBOR to SONIA, and so has the United States. So we are basically going into a more, we're getting in line with the international benchmarking standards. Going forward, of course, we expect that there'll be greater synergy between the MPR and NOFA going forward, and that MPR is a benchmark; it's a general benchmark rate, but the NOFA, it will give you a clearer idea of exactly at what point transactions are being executed. And indeed, going forward, as we go down that road of inflation targeting, it will be a key ingredient to plug into that inflation targeting framework.
Thank you. Good afternoon, Governor, members of the MPC. My name is Sunday Michael Ogo, and I write for the Daily Trust. Let me start by saying that I joined Nancy in congratulating you. And I heard you clearly when you said you were quick to dedicate the award to members of the staff. I think the only competency you have not congratulated is also the media. You project these reforms and tell the positive stories of them.
Yes.
Having said that, Mr. Governor, I would like to say that recent report indicates that deposit money banks in Nigeria have extended 5.45 trillion less credit to 8 major sectors of the economy in 2025, with total lending falling 14.8% to 31.3% when you compare that to the previous year. This is likely due to the CBN decision to discontinue regulatory forbearance. I would like to know the thinking of the Apex banks around this development. Thank you.
Thank you very much. Again, first and foremost, let me without hesitation include the members of the press for their, major contribution towards getting us here. And I say major because, sometimes there is a tendency to take these things as just one of those things, but they are not. Some of the decisions that we have taken, been tough, been hard, and it's been useful to have the press interrogate, understand the issues underlining the reasons why the decisions are taken in a particular way, and helping to propagate that out. So I want to use this opportunity to thank them very, very much. Indeed, I must say that this award is not an award for, it's an award for the whole country. And we all, as Nigerians, should be extremely proud of this award. You see, and without the different segments doing their own part, just like I've said, the press, without them doing their own part, a lot of what has been done, the judges who are doing these things and looking at these things, perhaps they may never have gotten to the conclusions they did. So it's not at all my intention to scoff at any input that has gone towards getting to where we have gotten to. It's a major accomplishment, and it is one that we should continue to remember during this year, because we are the Global Central Bank of the Year for 2026. And it's something that, as I said, we should continue to remember and to celebrate. And everybody has played a part in this, and we're particularly delighted for this. Even having this event today is part of it. Okay, and that's why I said earlier that sometimes we think the world isn't looking. They do. They go out onto the media, they check our communique, they check what the different members have written, they check the press inputs and the press views and editorials, and these are the things that they look at on a continuing basis, which we will think nobody's looking at. The issue of the decrease in lending. Now, let me say that I don't want us to confuse by any stretch of imagination something that is temporary and something that is more permanent. Forbearance, we felt, had outlived its time. It had outlived its time. And if many of you will recall, this is something that came as a result of COVID. Okay. And now we're in 2026. And really and truly, we did not see the reason why that should continue to form a part of the balance sheet of the banking system. And the time had way passed. So as a result of that, the banks themselves, took cognizance of this, and of course decide to now recalibrate their portfolio. And in the process of recalibrating their portfolio, not surprisingly, you would see a decrease in their outstandings, in risk assets. You would see that. That's not surprising. But that's just temporary because, again, as they've raised more capital and they are building buffers and they are strengthening capacity, that will begin to go back to a level that is commensurate with their size and their capabilities. So I don't want anybody to get the wrong impression. It reflects a transition to a more sustainable and better quality credit environment, which is what we all want. Is what we all want. We don't want these unanticipated shocks that come in a boom and bust fashion. One moment you're happy, the next moment you're having to take out things that you never anticipated. We are avoiding that by all means. So please don't get that wrong impression. The banking system continues to be safe and sound, and you will see in the fullness of time, many of these things will settle and credit will go back up again.
Good afternoon, Governor, sir. My name is Sarah Chimu. Recently, we really hard on microfinance banks. 6 of them were released. I'd like to know the fate of the over 800 others who are left. Are they healthy? Are they compliant? Thank you, sir.
Thank you very much. I will say that, yes, we had no choice at the time but to sanction and take out, suspend the license, or take out the licenses of those banks. And the response to that, quite frankly, understanding the fact that many of these, or all of these, in fact, were compliance-related, supervisory related issues that had lingered for some time. The response to that, of course, has been that there's been a shake-up and the industry has come to a position where they are more alive to the responsibilities of ensuring that they meet minimum thresholds and they do not find themselves wanting with respect to their adequacy ratios. For us, honestly, the important thing, and I hope this will answer your question, the important thing for us is to ensure that we can, at all times, support and protect depositors' money. That to us is the bottom line. And again, just as we were talking about inflation earlier, we will do everything we need to do to ensure that we're able to deliver on protecting depositors' money. So, depending on the extent of infractions, will determine the response from the central bank. Thank you.
Thank you, Mr. Governor. Sir, allow me to ask questions on behalf of women here of this day newspaper. She said, Mr. Governor, still on the post-recapitalization program, I would like to know the status of the banks that have not yet met the new fresh rates. Thank you.
Thank you. Again, I think It's important to give ourselves credit, give the banking system credit for the enormous gains that have been made. I mean, really and truly, being able to capitalize without extending deadlines for out of the 37 banks, 33, were able to meet this particular threshold that we had set. So I think that is something that is very, very commendable. And of course, much of that money came from domestic sources. Again, hugely commendable. And the amounts are really extremely something that we as Nigerians should be very proud about, especially considering the fact that Nigerian banks dominate the African continent in many respects. They are all over the place, and they are helping to catalyze change in the commerce in many countries on Africa. So I think that is a good thing, and I think the recapitalization exercise has been a successful one. And I can say to Nigerians that our industry has been considerably strengthened, and that going forward, we will see that as they themselves begin to build their buffers, you'll find a more healthier and increasingly healthier banking system that all of us can be very proud about. This is not something that happens overnight. We want by all means to avoid, again, the boom and bust where, in another how many years' time you're having to go and we want to ensure that our supervisions will be put in place to ensure that our system remains strong and resilient. That philosophy also applies to those banks that had not met the capitalization requirement. And I will remind you that for a number of them, in fact, for them, let me not even say for a number, for them, for those ones, you had a situation where, unfortunately, there was intervention at a particular point in time, and so they lost out on time. And a number of other things had happened, which the central bank is fully, very, very fully, from a regulatory standpoint, fully in tow with. So there's, as far as we are concerned, they're on track. There are different alternatives that are being looked at to ensure that they get up to the same level as the other banks have done. As at this point in time, again, I can confirm that you can go on with your normal business and that those banks are under our guidance. They are strictly under our guidance, and you have nothing to worry about.
Thank you, sir. I have another question from Ukoya Mulambu of Leadership Newspaper. He said, Mr. Governor, sir, the CBN recently issued a statement stressing that both the commemorative 100 Naira banknote and the standard 100 banknote remain legal tender in Nigeria and must be accepted for all transactions nationwide. Why are the lower denominations of the 100 Naira scarce? And are there still coins in circulation? Thank you.
Sorry, the last part of the question, and are there coins still in circulation? Okay,
Yes.
Thank you. Thank you very much. All right. Yes, the answer to the first question is yes. They are still legal tender. And to the extent that the central bank has not said otherwise, please assume they are legal tender. Now, the question as to why we do not have as many of them in circulation as may be perceived that some would want is a question of demand and supply, quite frankly. Where the ecosystem is moving, as indeed we want it to move, to one of financial inclusion, where digitization is becoming increasingly important to many. So if there's not need for coins or for lesser denominations, then there's no need to have them really. Okay, and I think that my view is that for those of you who have followed the recent launching of our payments vision for the next 2 years, you'll find out that we set ourselves a very ambitious goal to increase financial inclusion in the next 2 years. So my sense is that you're likely to find less and less demand for these denominations. And of course, let's face it, devaluation has had its own toll. So that's nothing for us to scoff at. But most importantly, as we're going with financial inclusion and ensuring that digitalization becomes a way of life, you'll find that people who are likely to be demanding these less and less. It's very interesting. In some places in the United Kingdom, if you go to certain restaurants or certain places, you'll be shocked that they don't accept coins, they don't accept cash. It's either card or nothing. So the world is moving in a particular direction, and we won't be left out. We're not saying that these things will happen overnight in the case of Nigeria, but that is the way the world is going to. For those of you who travel abroad these days with your Naira card, you can pay with your Naira card. You can, if those who go on Hajj, those who go on pilgrimage, most of you, and I know there are bottlenecks here and there. I realize there are bottlenecks, but generally, you can see the world is converging around digitization.
Thank you, Mr. Governor, and members of the MPC. This brings us to the end of this presentation. Thank you all for coming, and see you in September.
Governor, please look at the camera. Everybody, yes.
Thank you. Thank you very much. Thank you.
Thank you.